Welcome to Bull Bear in Brief. I'm Joe Quartucci.
I'm Arpit Sharma.
This week, an AI chip company added more market value than the GDP of most of the countries on Earth. And so that
Yep.
is always fun for us to think about. It's going to be a big show today. We're going to cover a lot of topics, talk a little bit more about some things. I want to make a quick shout out, which is that we're probably not gonna get so psychotic about being super brief anymore. The feedback that we've gotten is some people might like us to go a little longer sometimes a little shorter. So the goal is gonna be between 25 and 45 minutes to keep your attention, but if you wanna stay on and listen longer, we'll
Yep.
allow, Mr. Arpit to pontificate, to a little greater degree. But we just came off the heels of Mother's Day. So how was your Mother's Day, Arpit? Did you spend time with your mama?
Oh yeah, I did. I came all the way back up to Dallas, hung out with the family. I made a mistake. I was planning on taking her to her car dealership, and found out they're all closed on Sunday. So
How come
then
to
I had
think?
to delay. She told me it was the thought process that mattered more than anything.
Understood. So Mama Sharma and you spent some time together. I took my
Yeah.
wife to Dallas myself this weekend. We went to watch the Cubbies play the Rangers, and the even though the Cubs are in first place, my beloved Cubs did get their butts whipped pretty good by the Rangers 2 days in a row. They didn't score a run, but on Mother's Day we had a little breakfast with my wife, and texted my mother and told her how much I appreciated her raising me, and tried to shower my wife with affection for having raised our three wonderful children. Very lucky, and a big Mother's Day shout out to all the moms who are listening to
Hmm.
us today. We hope you were venerated and honored on your Mother's Day yesterday. Because of that, we didn't do a show. We're doing it on Monday, so we're going to
Yeah,
give
yeah.
you,
That was the plan.
yeah. But yeah, a couple things kind of touch on. Market was up about 2.3% for the S&P, which is
Hmm.
the one that I pay attention to the most. Nasdaq was up 4.5. So again, we're
Yeah.
continuing to see the technology outperformance. AMD, which is a big story, up 20% last week. Huge blowout on the earnings, making some headway with catching up with Nvidia, maybe, but also just partnerships with OpenAI and Meta,
Yeah.
potentially bringing us into a place where AMD could really do some catching up on valuation. Of course, tread with caution there because it's already pretty highly valued. WTI crude, we've been talking about that since the show started, down 8% last week, probably up a little bit today, knowing that the talks have failed, but
Stalled.
$95 was what it closed at for the week at the end of the week. Brent crude stayed pretty stable. Did hear Mohammed El Arian talking this morning about how maybe 6 more weeks of this and we end up in a global recession. Any thoughts on that?
Yeah, Muhammad Al Arian. So smart guy. Obviously has a lot more money than me under management and all that. He has been calling a recession almost every time he goes on there for the last 20 years. Not last 20 years. I'll
He's
give
called
some
25 of
credits.
the last two recessions.
25 of the last two recessions, and one of them was a pandemic caused one. So I won't give much credence on the recession calls from Al Arian. But he's also, I mean, what he generally says comes with some level of, something he is generally right on, that if this continues, expect again greater supply constraints happening from Middle East. I don't know if you saw the big blockade that we're doing, the Danzu blockade. The whole purpose of it was to prevent Iranian oil from getting through. They're now dumping it into the straits. There are images showing that they're starting to dump oil. So it's a crazy time. No peace deal on the horizon. What did we get? What were those numbers, Joe? 4.5 on Nasdaq. Two.
4.5% for the week. We're at record highs again. So again, that buy the dip mentality that has
Welcome to the
driven
markets.
markets really, honestly, I would say back since 2018. Anytime
Hmm.
there's been a significant sizable dip, say 5% or more, the buyers of that dip have been proven correct. Even in COVID, that dip did not last that long, that really significant 35, 36% correction. Thanks to the stimulus and all those things has really
The
it
rapid
turned
rate
around.
decompression.
The most significant pullback since 2018 has been 2022 with the
Hmm.
Ukraine and Russia war starting, the shock from inflation and
Yeah.
higher energy prices, kind of similar to what we're having right now. The quote unquote shock from Iran was a kind of a nothing burger. We hit 9% on the S&P, 14% on the Nasdaq. That doesn't seem like a major. That's like a run of the mill
Correct.
correction, not the bear market. So considering how much risk there can be with higher energy prices and what higher inflation might lead to, it's really surprising to me that markets have been so willing to overlook it. And again, I keep calling it a head fake, and we keep getting told that there's a peace deal near, and like you said, that just doesn't appear to be the case, and it's the only leverage Iran has over us as the Strait of Hormuz, and I don't see them giving that up unless they're getting significant concessions. And so,
Yeah.
we don't have to get into the politics of it all, but it has definitely been from an economic perspective, not great. From the market's perspective, don't seem to care. And that
No.
to me, I look at it. My view is technology advances in productivity trump,
Mhm.
no pun intended, any ne- any negativity in the straight, any negativity with energy. The amount of advancement that is taking place in the world because of artificial intelligence, the speed with which people who are adopting it are able to work faster and more productively is just more powerful than $100 oil. $120 oil, $140 oil, maybe something different, but at $100 right now, it looks like a yawn for these tech companies. Am I fair? Am I right?
Yeah, you are generally right. And someone I did remember hearing about this, that if we were to see oil impact the economy in the same way that we saw it happen in the 70s, that if you were to adjust it, that you would need oil to go well above 200, 250, for it to broadly impact.
Yeah.
Now, again, I'm not an
Just paid
oil.
$5 for gas. Now, I'll admit I do put Supreme in my car, but I don't remember paying $5 for gas. I don't remember in Texas. I don't remember the last time that happened. In California, in Chicago, for sure, but in Texas, where the refineries are a little closer, I can't remember the last time I paid $5.
No,
Maybe
it is it.
Hurricane Katrina for just a second in 2006.
I don't know. I wasn't driving at that
Yeah,
time, so I
probably
couldn't.
like
I can't.
4. No, you were 7. You were 7.
Yeah, so
You were
these.
in grade school, so that's pretty funny. Hey, just I don't know if you remember this, but my conversation that we're gonna go into later is the midterms and how they might affect the economy. So why don't
Mhm.
we put a pin in the politics side of that, and we'll kind of cover that a little bit here in a little while. I do want to spend some time. It's okay with you talking about the AMD move. So up 20% in the week, up 90% in the last month. So if you're an AMD stockholder, you're feeling pretty good. If you're not, you're like, is it too late? Have I missed the boat? $121 a share. And then it crossed over a $700 billion in market cap. It's moving very closely towards $1 trillion. They're going to join the $1 trillion club there with Nvidia and Apple and some of the other big, huge mega cap companies. 1 year return on AMD, 253%. So, what's sparking this big move forward? And I know you know a lot about this company, that you research it to a great deal, Arpit. But one of the things that sparked this big move forward, you had a big conversation with OpenAI. You had a big conversation with Meta. Those are OpenAI is a private company. OpenAI is ChatGPT for those of you that don't know. They made a deal with AMD on a 6 gigawatt OpenAI development. They are kicking off the second half of the year with more of the M1 450s that AMD makes. So that's also why NVIDIA has been so hot, is because of OpenAI. So a lot of people are writing off ChatGPT right now, but they're still the number one most used AI model on the planet to this date, even though Claude has maybe more business use. The regular run of the mill consumer is using ChatGPT more than anybody else. But they also announced a partnership with Meta for another 6 gigawatts of their
Mhm.
GPUs going into the data centers starting in the second half of 2026. So that's this year. So that information came out and went public, and they went up. So, give us, why don't you give us the bull and the bear side of AMD, since I know that's a stock that you've looked at real closely.
Yeah, it's and then full disclosure, it's a stock that we do own. Apart from just also S&P 500, which owns AMD, we also directly own it. So there is some level of bias, obviously, to whatever I say. But the big story.
Before you go on, let me remind everybody who's listening, as I try
Mhm.
to every week, this show is not advice. Don't you run out and buy AMD because you listen to the show. If you're buying AMD, it needs to be a part of your larger financial plan. Talk to your financial advisor about it. Talk to your tax advisor about it. Talk to whoever you trust. If you're a DIY person, make sure you do your own research. This is just us talking about what was a very large, fast move in a very short period of time, which caught our attention. So this is not advice. Go ahead, Arpit.
Yeah, and so the bulk of our thesis was we were expecting an increased demand in the M1450 chips. We were expecting, uh, we believe that AMD was being written off essentially in the beginning of the AI hype cycle, for full commitment towards Nvidia. That was generally what we were seeing. If you go back to 2023 and early parts of 2024, AMD was a laggard in the semiconductor industry versus its broader competitor of Nvidia in that space. This is because no one was expecting it, no one was pricing in Nvidia or AMD GPU usage at all in data centers, and we believe that was relatively unfair. And so now what you're starting to see is, I'll call it a momentum or a catch up lag to kind of get AMD's growth to where we were starting to see Nvidia in the first parts of the AI hype cycle. So you could see this as like a delayed something that were expecting to happen earlier, now all happening at once here, right? So
So
it's a delayed growth
okay,
essentially is
so
what we're
it's not
starting to
just an
see.
earnings beat. So I think is
It's
it
partially it's earnings speed, it's increased demand, it's also the quality of the GPUs that are coming out, that they are fairly competitive. So it's a lot of stories that we're starting to see, and that AMD is now becoming a actual competitor, and it's a good thing, right?
right?
Because we
That
want
usually
better
drives prices
GPUs.
down, but basically, from my perspective, it's been kinda like watching NVIDIA and the 7 dwarves when it comes to the companies that make
Yeah.
microchips, and now you've actually got a like you mentioned, a real competitor here, but isn't it really just this, and this is there's a reason why I'm gonna ask you this question.
Mhm.
The movement for AI is it's too big for one single company to handle, so really there's room for AMD to grow at this rate,
Mhm.
and there's also room for NVIDIA and the other micro chip makers, the other semiconductor makers to rally in congruence with or alongside of AMD. This does not have to come at the expense of NVIDIA at this moment. Is that a fair take?
Yeah, and actually, I have a data point to share with you. I'm kind of getting worried from this one, but we track XSD, which is, for those who don't know, it's an ETF for semiconductors, and unlike other ETFs, they are a parity ETF, meaning they're just equal weight across the entire semiconductor industry. Do you know what the returns are so far in this year for that XSD?
I thought somebody say 40%.
72. Equal weighted. That means every single company equally is around that 72% return, if not higher. Basically, you have some low and then you have some way higher. And it's not just the GPU designers, right, which is what AMD and NVIDIA are. They don't make any chips, they design them. You have TSMC, which is the actual builder. You have the memory chips like Micron, right, and SNDX. So you have all these niche semiconductor companies all exploding in growth this year. So yeah, we're starting to see that breath in the semiconductor industry kind of just blow up now.
Did you see the little joke I sent you over the weekend? You
Wait,
invested
wait,
S if you invested
oh yeah.
$25,000 in SNDX, which is, remind me the name of that stock, the name of that company.
Gosh, it's like
It's
it's a Korean company. I think like Synix or something like that.
yeah, SNDX, it's a
Syndax,
yeah, Syndex.
Syndax.
If you invested $25,000 16 months ago, you'd have $1,000,000 today, and then the caption below says, "You stupid idiot."
Yeah,
How come you couldn't see that coming? Where was your crystal ball? But to your
yeah,
point,
yeah.
it is that broad rallying. So let me ask you the question that I think is probably going to be most salient to our investors. I'm sorry, to our listeners, not investors. Why are you worried by that?
Yeah. Why am I worried? One, this is the greatest year for XSD in its entire history, and the year is not even halfway done. So that immediately indicates to me overbought signals, right? Not overvalue. And there's a clear distinction. And people like to conflate the two, where they see something go up quite a lot in a short term, and it's like it must be overvalued. There's a strong, in our opinion, that semiconductors in general are very overbought. Right? You can use the technical indicators. I kind of hate technicals, and sometimes in short terms they're not wrong. There is clear overbought indications on semiconductor play, and what I'm worried about there is that people will see returns of, damn, these guys are up 72%. Now let me get in. And that's kind of something we see, at the top when a lot of people start to invest, that's when you have your big decline and they don't realize anything. So for me, someone who's a long-term investor, I might, if XSD falls 30%, I will still realize great returns on the year. But majority of people who miss the trade will now try to get in on, they'll eat nothing but that loss. So it's a psychology thing. People have this, they call it FOMO, right? They see this massive return, they missed out on it, they buy it near the top, and then they eat nothing but straight losses. We saw this earlier in the year. Joe, you and I know we both saw this in commodities like silver
Gold,
and
silver.
gold. right? And people ate up the silver trade, and they didn't sell out in time, and the silver went from being plus 20% on the year to what is it now? It's not even that heavily positive still versus what we saw. It's
It gave
only
back a lot of its
12%.
gains.
It gave back, yeah, it gave up a lot of gains. It was up, twice as much of what it is now.
I guess
So,
to be the devil's advocate there
mhm,
with this particular asset class, and again, just keep repeating, we're not telling you to buy these things. It's hard to imagine putting the genie back in the bottle for AI, and the usage and the adaptation is just going to get larger and larger and larger and larger. And so it's hard to see anytime in the next 2 or 3 years there being a significant pullback in demand because the companies that are purchasing these chips already have the money. So a recession, a change, it's not going to they're not going to stop. Amazon is not going to stop. Meta is not going to stop. Apple is not going to stop. Google is not going to stop. So these are the biggest, most wealthy companies in the world. I almost call them countries, and they have capital to spend. The stock prices of those companies, I could see those potentially suffering because they could be CapExing into something that doesn't produce revenue for them. But the companies that actually make the chips, I just can't see a story at this point. Doesn't mean I'm right, where their demand for their products stops or reduces enough to pull back this move that we keep seeing that is exploding higher. And maybe the move slows down. Maybe the trade is long in the tooth, but it's just hard to imagine that changing. It's hard to imagine it not continuing to go up. I mean, they are all saying it's a capacity issue at this point. So that's
yeah,
just my take and kind of like how I feel about it. It doesn't mean that that's an investable thesis.
mhm, yeah, no, and that's understand. And that's again, that's kind of the viewpoint for the last 3 years. Is people come in and say, "Oh, this has to be overbought," and then just keeps going up, right? We know investing in semiconductors for the last 4 something years, there's been a lot more ups than we've seen down, honestly,
Right.
right?
So a couple of analysts on AMD went from 265 from Bernstein to 525 on their call. They're already at
Yeah,
four something, so they're almost there. Barclays and Cantor both went up to $500. Bank of America's at 450, saying that they have a 6% market share, which would make them worth about 1.5 trillion by 2030. So if they're worth 700 billion now and the value is projected to be 1.5 trillion by 2030. That's still a 100% return in 4 years. So that's Bank of America. Of course, this I want to kind of reiterate something that Arpit was talking about, which is the forward PE on AMD is now 31, a very overbought valuation. That tends to be a bad tool for valuation in the short term. Over the
mhm,
long term, it tends to be a greater one. Now AMD can grow into that valuation like Nvidia has. So Kathy Wood, she is famous for running ARC, and she has been trimming her position. And then HSBC also downgraded pre-print, of course. So once the earnings came out, no, they probably weren't feeling great about having downgraded AMD at that.
yeah.
So anything you want to add there before we move on?
No, other than AMD has done really, really good. Semiconductors have roared. Um, again, I would always preface due diligence and make sure you like if you're going to buy an individual equity, any stock, no matter what it is, make sure you fully understand kind of what they're doing and what you're kind of getting into.
Yeah,
Don't do return chasing.
don't do return
It's
testing. Yeah,
it's the
it's
fastest way to destroy wealth.
my advice that I would give all listeners is this. Of course, listen to the professional you work with. If you're DIY, every decision you make runs through what is the purpose of each dollar? Is it for long term
Mhm,
growth? Is it for speculation? Is it for the fundamental creation of wealth? I mean, there's all sorts of questions you need to ask yourself as you're deciding whether or not you're adding a single position or a group of positions to your portfolio. In general, we feel very constructive on semiconductors over the long term. Over the short term, I have no idea what's going to happen. And anybody that tells you that they do, you should probably be running for the hills. Before we get into the midterms and how they might affect the economy, Arpit, I do want to talk about the payroll number. My head is spinning because 115,000 jobs used to be a crappy number. I'll say shitty number, so we can put the E on this. And all of a
yeah,
sudden, like I watched CNBC and Fox Business News, and they were turning circles about how great it was because they were only expecting 55 to 65,000, and we got 115. Unemployment rate staying at 4.3, which, in case you don't know that, that's an exceptionally good number. It's higher than it was before, but 4.3 used to be considered full employment. meaning we don't have really an issue there. I will say that wages are up 3.6% year over year. That was below expectations, and inflation is currently running around 3.8. So, what that means in the real world is the costs are going up faster than the average person's wages, which means they're experiencing a greater degree of pain than they were a year ago or 2 years ago when
Yeah.
wages were growing faster than inflation, meaning I was getting more money from my employer or in my job or in my business than I am seeing at the grocery store, or at the gas pumps, or in some other areas. What do you want to tell me about the jobs number that I didn't catch?
No, nothing much really. I mean, it is the ADP job number.
No,
Just
that
so
was,
you
that
guys.
was the jobs number, the
Oh,
115. Yeah,
yeah.
the
Um,
official number from BLS.
yeah. So it's
It's a
a like you
correction,
said.
genius.
Yeah, my bad, my bad. Uh, it's a uh, 115 isn't the best number, but it's also if it's above expectations, everyone's gonna throw a party, right? Now one thing that's starting to, I guess, kind of intrigue me a little bit is that 4.3 unemployment number.
Yes.
If you're like me, you're probably monitoring all these mass layoffs that tech guys are going doing, and you're also probably looking and perusing what other people are saying about the job market, right? Because one of the consumer surveys that we look at are one of them is like job based surveys, and most consumer surveys are relatively low. There people are relatively unhappy, but if unemployment rates are 4.3, which is healthy standard unemployment rate, kind of what's happening. And it was actually really funny. On my dad, he travels a lot, so when he came back, he took an Uber from the airport to our house, and the Uber driver was a former tech guy at one of the big tech companies. And so there's something that starting to happen, or I'm starting to read about these people that when they get unemployed, they don't just sit on the unemployment market. They go join the gig economy, right? Which is your Uber, your Lyft, your DoorDash, your Uber Eats, and these aren't really reported as unemployment numbers.
That's
So
it should be being picked up in the U6 underemployment number,
yeah,
which did have a big jump. 8.2
it's
would be
pretty
the
big.
underemployment number. And by the way, like I've talked about this before in the show, I've got a 22-year-old son who's graduated from college recently, does have a job, very, very fortunate in that regard. But the underemployment rate amongst 18 to 24-year-olds is 40%. So that is one of the reasons why you got so many ticked off people is people are not doing what they think they are trained to or what they're capable of doing. So that's adding to that, like that I guess that angst, especially in that younger crowd.
Yeah.
Anyway, I interrupted you, Arpa. Go ahead.
No, and that's again, it's like if you start looking at alternative sources of unemployment or underemployment or some level of, I guess you could say, pain, you're starting to see a little bit of this increasing weakness that
Yeah,
we're seeing on the lower levels of. But again, these are the lower levels of
J-shape economy. We're
society.
going to talk about that next week with our first guest, Connor Caps.
Yeah, kind of like see this. See, I'm setting it up. I'm setting up a future episode here.
How do you do a K? I
You're
don't really
throwing, you're
know.
throwing, you're throwing up gang signs.
No K. This is
That's
a
not a
K.
K.
Yeah.
It's not a K. That's a V.
Oh no, look, there's the K. It's in there. I think we
Oh, okay,
got.
I see. I see. I see it now. Yeah.
But there's two things I want to point out to you. You probably hadn't had a chance to look at this very closely, but I've always paid really close attention to the jobs market because I think it's a canary in the coal mine, and we've had a really good jobs market for a really long time. Like COVID notwithstanding, we've had a solid jobs market post 2008 crash. It's been really, really good. I mean, we've had there have been periods where it's been better than others. We're in a weaker period right now, no question, but overall, not a weak jobs market for the better part of 18 years. But there are some things that I'm pointing to now that I've been saying would be eventually happening. The labor force participation rate is now down to 61.8%. That's the lowest since 2021. That's the lowest since COVID was really, really roaring. Labor
Yeah.
force participation rate tells you that people have given up looking for jobs and that they're just not even trying anymore. The reason why I postulated that we would have a low labor force participation rate is that there were 80 million baby boomers. There are probably 78 million baby boomers now. Some of them have died off, and may they rest in peace. That group is now 10,000 of them are hitting age 80 every day and will continue to do so for the next 13 and a half years. Most people at 80 are not working anymore or are about to not be working anymore. And so again, that labor force participation rate is, I think, going to continue to have pressure on it. That plus that cohort that I talked about earlier of 18 to 24-year-olds that has given up. They're like, I just gonna go live with mom and dad. I'm not gonna do this anymore. I'm gonna wait till I can find a better job market. That labor force participation rate ought to be concerning to more
Yeah.
people. And the other thing that I want to bring up, and then it's your turn, Mr. Sharma, is revisions continue to be negative. A lot of people are having issues with trusting the data. We had another 23,000 jobs from February revised taken off. That means we lost 156,000 jobs in February. And that now means that 911,000 jobs have been removed just since President Trump was elected that were originally reported. So the original
Yeah.
report and the revisions, which is normal, by the way, the revisions have been happening for as long as I've been in the business for 26 years. For them to be this high is not normal. So 911,000 jobs that were reported were removed. So what do you have to say about that, Arpit?
No, nothing extra other than revisions are coming in. I wouldn't be surprised if this ends up being a negative jobs report in the future. The
That would be a
revisions
big
are,
revision. 115,000. You don't usually see that many in a single month.
you know, uh, it. We did have what one
That
massive
was
revision,
Well, that
right?
was
That
a
was
that
a rare one.
the massive revision got everybody's tinfoil hats out. Everybody's saying it was a conspiracy
Yeah,
theory. I need to get me a tinfoil hat for the show, but the reason was that was a full year revision.
yeah,
So that was not a that was like when they finalize it. And again, there are issues that I think need to be addressed, and this is one of the reasons why hopefully we get back to some sort of normalcy in our politics. There does need to be some cooperation amongst the only two parties that we have currently available and finding a way to report these numbers more accurately. I mean, there is a way by which we get their initial read is antiquated, especially in a world where we have artificial intelligence. It should be able to be more accurate, should be able to be more reliable. It isn't because they do it over a month. It's not very far after the information comes in. And so just in general, if you're using older methodologies to do that, you could make it more accurate. The other thing that you mentioned is this gig economy and people starting small businesses and things that are a little more hard to find in the data. You're just not going to get that information 15
yeah,
days after a month ends. It's just not going to happen. So I think that's really just kind of most average listeners, most average Americans don't understand how that sausage is made, so to speak. But it does matter. One of the things the United States has been very good at for a very long time is counting things, meaning the information, the data that we put out about our economy, about our jobs market, tends to be very accurate. And the fact that it is accurate means that people want to invest in our country. That transparency, that openness, that reliability of the information that the government puts out makes us competitively better than Europe, Asia, particularly China, Russia, Brazil, the quote unquote BRICS nations. They can't compare historically to us, but we are starting to have our reputation damaged by these larger revisions, and that needs to get turned around. All right. Anything you want to say before we move on to the midterms? I want to talk about that. Yes, it's political, but it's not. We're going to talk about it in money terms.
no. I'm interested to see what we bring up here.
Yeah. Well, I want to hear your opinion too. So, Trump's approval ratings currently sits 40% with 56 disapproving. That's on an Emerson poll. Generic ballot right now has Democrats with a 3-point advantage from Morning Consult. Emerson, the same poll that I quoted for Trump at 40%, has a 10% advantage for Democrats in the midterms. There are a lot of listeners out there who are going to say, I don't trust the polls. Fine. Outside of presidential elections, though, they have been pretty accurate. When Trump's on the ballot, there is an error historically on these polls. But
Yeah,
when Trump's not on the ballot, they've been remarkably accurate. And right now, everything that we are seeing is pointing towards a blue wave in the fall for the Democrats, meaning they will likely take back the House, and there is about a 50-50 probability at this moment they will take back the Senate. I'll tell you why this is probably going to occur. You can disagree with me if you're a listener, and this is not me saying I like or don't like Trump or I like or don't like the Democrats. This is just the lay of the land as we stand here. Trump's approval on the economy, 37%. On inflation, 30%. That was something that he kind of ran on. Like, I'm going to
yeah,
get it to lower prices. No dice. Definitely not empirically true. Healthcare, 29%. So that's a big hole to
yeah,
dig out of. There are all these conversations happening around redistricting and gerrymandering in the Supreme Court, ending the Voting Rights Act, all sorts of things that are going on. At the end of the day, a wave, if it's big enough, will capture districts that it shouldn't,
Hmm.
districts that would normally not be competitive. And that's the setup that we're looking at. Now, I'm going to throw on a couple other things. The Iran war is 53% of Americans view that as a failure, 35% as a success. Again, Trump's got a pretty strong floor with the MAGA base, and around 32 to 35% of the country will be with him no matter what he does. Independents, though, 57% do not think the war has been a success. Only 30%
Hmm.
think that it is. That's who decides elections. It isn't Democrats and Republicans in the fringes. It's the independents and which way they swing. In the special elections that have happened in 25 and 26, Democrats are overperforming 2024 by 15 points. If that holds, you will see the Senate go blue. That's my commentary on the political part of it. When we get into the money side of it, it's a little bit more interesting. I kind of study this too. I've always said this to my clients because I have clients that are Democrats and I have clients that are Republicans. So I try to stay pretty much in the middle when I talk to them. What I would say is that when we have split governance, a Republican at the White House and then a Democratic Senate or House, or the other way around, Democrat in the White House and a Republican Senate uh, and um, and a House, we typically have gridlock on
Yeah.
legislation. And for markets and for businesses, there is a degree of certainty that comes from there not being major changes. There might be some executive orders, particularly the last couple of presidencies. There's been a lot of those, but executive orders tend to get beaten down in courts. And so there's not going to be any law, really big, really radical new laws passed. That typically gives businesses a 1 to 2 year period of certainty. And in those years, markets, not necessarily the economy, but markets have tended to overperform. What do you think about that, Arpit? I just talked for a long time.
Yeah, I know. Let me get in on there. Yeah, markets love gridlock. It might seem like a little bit of a surprise at first, but when you really think about it, no, right? We want some level of stability. We don't want rapid changes happening in our political system. And gridlock tends to bring about very little change. Almost nothing happens generally. And markets like that because, you know, and the markets think everything is fine, just let things keep rolling, right? Don't make these sudden adjustments. And so, if we do get a major Democratic wave, expect a lot of pushback on Trump tariffs, expect a lot of pushback on some of the other policies. Don't expect any pushback on the tax rates. And so, when you see that type of stuff start to happen, well, as a business, you start to see, okay, more favorable taxes, probably no tariffs. Thank goodness I didn't do any rehousing back in the U.S. for tariff stuff because I didn't even know if these were going to exist. Okay, that's just now a net positive for a business,
And
right?
on
And you
that,
can start this
on the tariff subject, Trump has now lost two battles.
in the Supreme Court.
One would be the blanket tariffs that he had added recently, and then the other being the I can't remember the name of the act, but there was a certain thing that he was
Like the
ICTTPA,
yeah.
IPC, some acronym, but both times now the Supreme Court has said you can't do that the way you're
Hmm.
trying to do it. So yes, I think that your point is well taken on tariffs, and your point on taxes also well taken. Not likely to have that change, and I think that's a net positive for your average
Yeah.
American and definitely your business owners. The one thing that Trump can do as a president and does do that I think is also a positive for markets is he's going to be lighter on regulation. He's just Republicans historically are going to be more for just
Yeah.
not regulating or reducing regulations, or you can call it smarter regulations. I don't care how you
Yeah.
characterize it, but a lower regulation environment means a lower cost to comply. And that lower cost to comply tends to lead to higher profits, better earnings. And so, again, a gridlock with a Democratic controlled House and Senate and a Republican in the White House could be a really favorable backdrop for markets to perform very well. Economically, somebody could have a different debate about that, but markets and businesses seem to probably be poised to enjoy that first year, which would be 2027. And then you have an election year in 2028, and election years tend to be also very favorable. So, because you're going to be looking at a presidential election in that year, and that means nobody wants to put news on the headline during that year that gets them beaten. So you're
Yeah.
looking at a couple of years of if this happens, we don't know. I mean, there's lots of time between now and November, and the mood and can change, and we don't know if it'll stay as it is today. But if it were to stay as it is today, I kind of view that as a bullish indicator in the short term.
Yeah. I'm with you there.
I'm telling anybody to go out and sell anything or buy anything. I'm just saying, thinking about it that way. I'm a human.
Yeah, I think the only if you're starting to look at it like that perspective, it's definitely a lot more bullish. Now, the one negative about gridlock is that there tends to be very little, as you say, changes to some of the more important things. I don't know, on in terms of deficit spending and all that type of stuff. And Democrats in the House and Senate tend to like to spend a little bit more, but Republicans still in the top like to cut taxes, so expect some increased whitening. That would be my assumption.
That's a subject matter that I've spent a lot of time on, and this may surprise our listeners, but deficits have grown faster under Republicans in the last 70 years than they have under Democrats. I would agree with your statement that Democrats like to spend money more, but Republicans have been less fiscally conservative than I thought they were,
Agree.
particularly because the inflows that come in during Republican times tend to be lower because they are lower tax. I like lower taxes. I'll say that out loud, but I don't want lower taxes at the expense of my son and my daughter and my son or your generation, Arpit. I don't want to have a 2% tax cut and then one day when you're my age, you have no ability to maneuver because you have a 50% tax cut. That's not an indictment on the Republican Party or a endorsement of the Democratic Party. It's just when I look out and I see 39 trillion in debt rising and I see we're waging a war in the Middle East and I see Social Security and Medicare underfunded really for the foreseeable future. And I see our education system underfunded. I see our healthcare system underfunded. I see a future that doesn't look very bright. And as long as I've been alive, I've been under presidents of both parties. I've been under Congresses of both parties. I have not seen enough cooperation to address the grown up problems that we have. It's really all about scoring short term political points and owning the other side. And if you're one of the people that are out there that are thinking that way, I'm asking you to reevaluate. You got we got big structural challenges that in order to beat them back, we are going to have to find some common ground. And so I would just encourage everybody to be thinking about not is this guy or this gal going to be good or bad for my bottom line, but what makes the most sense for the next generation of people. Start thinking about how you plant trees with which you will not sit in the shade of that somebody else will. And I think that that approach is going to help you make a better decision about who is the best person and best people to lead us forward into the future. But as long as we're talking about wedge issues and guys going to girls' bathrooms and women's bodies and things, as long as they keep us talking about that, we're not going to solve these big structural multi generational challenges that have not been addressed. Now I'm 47 years old. I've been paying attention to politics since I was 21, and I have not seen it anyone really since the 90s. I've not seen anyone really attempt to address the debt deficit, structural challenges like Social Security, Medicare, in any real, actual, like, hey, let me sit down with the other side, because unfortunately we only have two sides. And let me have a conversation about what you're willing to do. I'm not willing to give here. I'm not willing to give here, but here it seems like we agree. So let's pass that. Not happened. Unfortunately, I don't think that it will happen. And that's leading us to an outcome that is not very desirable. It makes me very worried.
Yeah, you got to think about what happens during the next recession. Do we print again?
I'll
Who
bet you,
buys that
bet you a
debt?
buffalo nickel they do,
Yeah,
because that's the one time the Democrats and Republicans will get along and agree is when there's a crisis. They'll be like, yeah, we'll pass a big spending bill. Just look back at COVID. We added 8 trillion plus in 2 years, and Trump was president for one of those years, and Biden was president for the other. So don't give me this business about it's this guy's fault or that guy's fault. Both of them spent more than $4 trillion on COVID, and nobody blinked an eye. And the stock market roared in response to it. So again, at some point, a grown up has to step into the room and say, while it might feel good to have a little sugar in the mouth, I'm looking down the road, I'm gonna have some cavities, and them cavities are gonna rot my teeth out. So let's not do that. Let's not do that. But I've been screaming that for a long time, and to no avail. And I will continue to remain optimistic, but it's gonna take our listeners, it's gonna take our people to wake up and see that this is not a one party problem. This is a two-party problem. And somebody's gonna have to actually tell the American people, you're going to feel some pain. It's not going to feel very good because we got to fix this problem. We may have economic growth that's under what we would like it to be. We may have employment that's lower than we want it to be. Hey, some of you Social Security payers, you may have put some money into Social Security you're not going to get back. But there's going to have to be some trade offs, or we're going to hit a crisis mode 10 to 15, maybe 20 years from now. And that crisis will make all the other crises that we've dealt with look like minor league compared to what could come. When we're at a place where our debt to GDP ratio is sitting at 200%, 300%, the faith in the US dollar will decline. You're already beginning to see the seeds of that. But the sprout and the tree of that is a disaster for the American people. So hopefully we all wake up. That was a really fun topic to talk about. It's kind of depressing, Arpit, but thanks for joining me
Yeah.
on today's show as you always do. And I hope all of you will like, subscribe, follow, rate us, tell us what you think, give us your comments, tell us what you want to hear about. Tell us if you have any guests you want us to reach out to and talk to. Go buy our book. Go watch us on YouTube. We got a bunch of stuff on there. We love doing this. And Arpit and I will be back with our first guest next week, Mr. Connor Capps, who has recently done an interview on Fox News in St. Louis, is going to come talk to us what he talked about on the show. He talked about the K-shaped economy. Arpit and I have talked about that at great length. We're going to hear a
Yep.
different perspective from our brother up in the Midwest, Mr. Connor Capps, who is a part of our company as well. So it'll be interesting to hear what he has to say and continue to grow his media profile. But thanks again for joining us. Like, subscribe, follow, do all the good stuff.
Thank y'all. Take care.